Hello, welcome back to the weekend video. It's bullwaves.org, obviously, and I hope you had a good week. Let's get into the markets and we'll see what's happened this week. We're ending the week on a superb rally in the stock markets, which is again confounding, but I think for the moment it doesn't change my outlook. And, I'll be called stupid and dumb for that, but that's just the way life goes, eh? For now, let's start on the FX markets and we'll work our way through as usual. So this is Eurodollar. I'm contemplating a possible alternate account here that might allow for some of a bit of a relief rally, possibly back up to the 115, high 115s up to maybe the mid 116s. And this is simply because the fall of a wave, this wave 2 in green, has been in 3 waves so far, and it's filled out a trend channel now. So there is that kind of niggling little thought in my head that this could be a correction lower of a larger 3-wave pattern. The main reason that I'm not jumping on that one right now is because the wave labeled wave 2 is so long and so complex that it would not warrant an initial move within a larger pattern. It looks to me like a pretty damn clear and complete pattern. So the only way we could really switch to that alternate account now is if we got a clear 5-wave rally back above, let's say, or back above 114.50 maybe, or something like that. Back above that mid-range there. For now, I'm still working on this kind of corrective form off a 5-wave low, and I'll get into that now. This decline that's happened over the last couple of weeks. We still haven't. We're actually back below that wave 1 low way back in 2000 and, way back in August. So we've broken that after a 1-2 signal to the downside. So in general, kind of, I'm pretty happy with the way this market is working out. Let's get into the hourly chart and we'll see what this 3-wave pattern looks like. You can see here that's the previous wave 2 high there at 115.69. So most likely got 5 waves down in a 1 and 3 waves up in a 1-2 pattern, and we've had 5 waves down, and we could be still working on this 3-wave, maybe an expanded flat. It's hard to know. The action today, well, we broke to a new low, but then we've rebounded back positive again above support. So it's like flipping a frying pan at the moment. It's hard to call that a completed correction, especially since we've got a kind of a 3-wave decline there. This rally up in wave A was not 3 waves, so there's arguments for and arguments against, and that's kind of always what's happening inside my head anyway, so that suits me quite well. For the moment, I'm quite happy next week to see a break of that previous wave A, and that would give us about 113.40, 113.50, and that would give us a nice clear pattern, and we could expect a further decline in a 3rd wave. But that's pretty much it on Eurodollar. Still expecting this 3-wave correction to complete, and by the end of next week, if we get pushed back up, let's say above 14.50 or so, then we'd see that little shoulder here at 114.50. If we got to push back above 114.50 in a nice 5-wave pattern, then I would probably lean towards that alternate account I just spoke of there a minute ago. Okay, so on to pound dollar. Again, further weakness. Looking for further weakness. We got further weakness this week. So far it seems to be in a 3-wave decline. So the drop off this previous wave 2 here, so that was a failed kind of C wave, so it's like a running flat wave 2, and the drop off that previous wave 2 looks to be in a 5-wave pattern, so we're still looking to clear out a 3-wave counter trend correction there to signal a larger move down. So let's get into this hourly chart here. That's exactly what we're working on here, more or less the same as euro dollar. We've got 5 waves down off that wave 2 high. 1, 2, 3, 4, 5. And now we're working on I think it's an expanded flat wave C. That's changed since last night, but it's pretty much the same as euro dollar right now. This decline here is a pretty clear 3 waves. We haven't had well, the market has corrected higher. It hasn't rallied in a nice 5-wave pattern as you would expect in a C wave. The C waves are usually in 5 waves. So next week we have that previous 4th wave there, about 129. Let's call it an even 130. We have the previous A wave there at about 129.60. So I'd expect a push back up to about 129.60 to complete a possible expanded flat wave 2, and then we look for an impulse wave lower again to signal wave 3 down is underway. So we've got declines, but this the last few days of action have kind of thrown the cat amongst the pigeons there for this second wave correction. So wait for that to clear up, I suppose. Dollar yen, we're still moving positive. The last day we've seen a decline. I think I mentioned last week that I might move this wave count up a degree, but haven't seen any real need to do that just yet until we start getting a real acceleration upside to the upside. But for now, we could. Here's one for you. We could have a 1, 2, 1, 2, 1, 2, 1, 2. Possibly. If that was the case, then we would like to see that previous corrective low to hold. Like to see that hold and a further acceleration to the upside, kind of more in line with that previous first wave low. Okay, the forward chart we've retraced a nice percentage of that spike decline there. We've come up nicely off that wave B low. If we do start to see more corrective action, more of a decline, let's say back into that 108 region again, then that might indicate that there's something different going on here with the first wave up, because this could be also a 1, 2, 3, 4, 5 kind of leading diagonal pattern, which is not totally out of bounds really at all. Okay, let's get into the hourly chart, and there you can see that's a pretty powerful decline over the last, relatively powerful decline over the last 2 sessions. We've rebounded slightly, but it looks corrective to me for the moment. This could be a 4th wave. We haven't broken that previous wave 1 low yet, so we could be talking about 1, 2, 3, 4 and an acceleration higher in wave 5. Jury's out on that one. I kind of thought that this 3rd wave would extend higher. It hasn't done that, and so far we've got a 3-wave rally off that wave 2 low. So if you're following me here, it's starting to get a little bit complicated. If I moved this wave count up by 1 degree, it would kind of look a bit like this: a wave 1, 2, 3-wave decline, wave 1, 5 waves up, wave 2, 3-wave decline, wave 1, 5 waves up, 2, 3-wave decline, wave 1, 5 waves up, and we'll be working on a 3-wave decline again. So it's a series of stepped movements in like lower degree impulse patterns to the upside. I would change my mind completely on this if we got a break back below that 107.70 low there. That's not looking particularly likely right now. So for the moment, tentatively calling that wave 4 low and a possible move higher in a 5th wave to happen next week. And if that doesn't happen, if we do get a break of that 110.15 level, which we've been kind of concentrating on over the last few days, then we would switch to that kind of that long-term still bullish pattern, but let's say short-term bearish with the possibility that we'd get a 3-wave decline, and this would be 5 waves up in a further impulse pattern. If that was the case, then we would like to see that this 109.56 level hold while we build, or while we complete that 3-wave decline. So for next week, we're watching that support 110.15 for a possible rally in wave 5 of. Got to change that. Why didn't I have that done? Possible rally in wave 5 of 3, but with the exception that if 110.15 breaks, we would be looking at a 5 waves up, 3-wave down correction, possibly an extended 3rd wave, so that could be exciting over the next few weeks also. So far so good. I mean, dollar yen has played ball. We've had continuous upside action off that flash crash low back in early January. So it's been a good solid run for dollar yen. Okay, you've always been waiting for this. Have I changed my wave count? No, I haven't. There is a caveat on this. The decline off the high is still in 3 waves, so 1, 2, or we can do that a bit better. Come on. 3 waves down. This could be a B wave up. So if that was 3 waves down in an A wave, this could be a B wave up, and then you would expect a larger C wave down. So I don't even prefer that, to be quite honest. But if that's the case, well, then you'd still expect a decline, a very vicious decline in a 3rd wave. If we were to match in a C wave, if we were to match the decline in wave A, that would bring price down to about 20,000 again. So both sides of the coin are still looking at an overextended correction to the upside in either a 2nd wave or a B wave, and we'll be expecting this whole rally to be retraced in the very near future. It hasn't happened so far, and that's been a bugbear on my in my brain. It's been a hard one to deal with in my brain, but I still see this as a real kind of relief rally in a B wave or a wave 2. And one thing I know about B waves and 2nd waves is they are sucker rallies, and they will be completely retraced. And of course, everybody's bought in. Everybody's been bought in for the last few weeks now, or over the last month, completely bought into the idea of a new bull market forever and ever, and that alone should signal some serious problems ahead. And if we looked at the put call ratios back down to kind of sanguine kind of peaceful levels, everybody's quite happy with the rally right now. We have total put call ratio back down 0.92, so that's right back down in like peaceful calm waters territory. We have put volume has been floored over the last few weeks. Again, which the data is up to the 14th of February, so that's up to yesterday. Put volume is back down to complete bull market territory. So nobody sees or can envisage a correction or even a bear market right now. And here's one for you. This is from marketharmonics.com. This is this is a stunning chart. So we had Nasdaq Sentiment Index is reading all-time highs. This is the 14th, so this is data from yesterday, and you can see the off the October levels, and the swing in in sentiment of the recent decline back towards all-time highs and bullishness has been just breathtaking. And that only spells one thing for me. We have again on this is a Ridex funds versus the Ursa fund, Nova versus Ursa fund, sorry, from Ridex, and this is I think the guys in Market Harmonics developed this themselves, but that's reading all-time highs, so, or at least all-time bullish sentiment, so at least since February 14th, so that's the 5-year chart there. But I'd be willing to guess that that's close, if not exceeding the all-time highs in bullishness. And we've kind of declined off those highs again, so sentiment is turning from an extreme at a lower high. So if this doesn't say a B wave or second wave extreme bullishness at lower highs, well, I don't know what is. You can see this is the S&P 500 chart that correlates with that sentiment indicator there. You got that a second lower high with extreme bullishness attached to it. So watch out. Okay, so let's get back to the charts. And the hourly chart on the Dow. I'm looking at a possible ending diagonal on a different form of an ending diagonal here with an extended wave 1, smaller wave 3, and then a nice sharp push into wave 5, break above. We've got let's say a throw over that top trend line there. Price has hit that 161.8% extension of wave A, so wave C in green. We'll go back down to wave A there. It's wave A up in 3 waves. If we take the length of that wave A and project it off the wave B low, which I've done there, and you can see that today's highs has just pipped above that 161.8% extension level. So we've got a nice common relationship in place with a possible ending diagonal at extreme highs in bullishness, at a lower high in price. And of course, the extent of this rally has been mind-boggling to me. But I don't think that the outcome is any different. And I don't believe we're getting to all-time highs again. All right, let's get on to gold. So that's the 4-hour chart in gold. We were working on a 4th wave correction with the idea of a move up into a 5th wave. We may have begun that move up into a 5th wave now, given the rally out of the lows over the last couple of days. The overall pattern remains the same. We've got 1, 2, and an extended 3rd wave. So we're still working on this 3rd wave to the upside. Here is the hourly chart, and you can see that correction off the high or that move off the high is it's quintessentially corrective, There is another way of reading this B wave. I'll actually just show you that now. We had a 3-wave move in A, a possible 3-wave move in filled a nice trend channel there, and maybe 3 waves down in C as the current wave count. You could view that a little bit different by saying 3 waves down in A, an A, B, C of B, and if we got to move down back towards that 1295 level next week, in 5 waves, that'd be a 335 flat completed. For now, we've broken out above that previous B wave high, so suffice to say, for the moment, I think we could be moving up into a wave 1. The only way that we could confirm a move into the larger 5th wave would be a break of 1326. So we're not so far off that right now. That previous B wave was at 1317 or so. Yeah, we got to break out above that today. So for the moment, we could be working on a first wave, second wave, 1-2 kind of bullish pattern off the low. So we want to see that C wave low, 1302 hold. That was yesterday's low, and then a break of 1326 to kind of confirm that rally up into a possible wave 3 of 5, let's say. Okay, move on to crude oil. I've changed my mind on crude oil today. I was working on, well, the alternate account has been there in the background for the last few weeks anyway. So it's most likely now that we've got a B wave filled in a possible running flat, and today's break to a new high above that is part of a larger C wave. So we've still got 5 waves down in wave 1. We're working on 3 waves up in wave 2, and we have 2 targets there: the 50% retracement at 59.50 and the 61 or 62% retracement at about 63. The trend channel kind of fills that 63 price a little bit better. Touch that upper trend channel, yeah, that would bring us up to about $63. So, and I think wave A equals wave C up about 63.50 as well. So for the moment, it looks like we might have a 1-2 moving into a third wave if we get a move higher, let's say back above 57 early next week. That would probably say that we're rallying in the third wave, with the idea that this C wave would probably carry into the end of February in a possible 5-wave form. You could also say that if we get let's say a sharper, or not even sharper, a kind of a quicker 5-wave move that doesn't even bring us up to the 60 level, maybe up around the 59.50 level, we could get like a 50% retrace, or sorry, let's say 50% relationship between wave A and wave C also. So that's not uncommon. Let's see, where would that bring us? Yeah, the 50%. If wave C hit 50% of wave A, yeah, let's get rid of that. This level of 57.50, that would be the point where wave C reaches 50% of wave A. Yeah, so we're in amongst the thick of it here anyway. I think in a a C wave, and we'll reach a 3-wave correction, and we'll look further back down again. This C wave could happen quicker than we might expect. So for next week, I think if this interim low here at 53.30 holds, then we should continue to move higher in the C wave as per that alternate count. Okay, the S&P. The S&P is the same as the Dow. We've got either a B wave high or a wave 2 high, and as I said before, I'm going to get a whole lot of slack for this, but that's what happens. We've got, as I showed you there in the sentiment figures, we've got more a higher extreme of bullish sentiment at a lower high. So if that doesn't spell wave 2 or wave B, well then nothing does. Okay, so the third wave down or a C wave down should bring us back towards probably the 2000 level again, and at least retrace that whole rally off the December lows. Okay. The hourly chart, again, this is this pretty decent 5-wave ending diagonal. And again, we've reached that wave A, wave C relationship, where wave C has reached 161.8% of wave A. 2770 was a level I was touting throughout the week there, and we've hit that today in a serious, sharp and stupid rally, but that's the way it is. We've got 5 waves complete in wave C. All we need is that impulse pattern to the downside. Time and patience. Okay, this is silver. Like I've said before, I think silver is moving in a kind of a slightly different formation than gold. We've got a pretty decent 5-wave move up off the recent extreme lows, in which it was labeled wave C of 2, so I don't use those XY labels at all. So that was the second wave low, and we got a rally in 5 waves up off that. Getting a correction now, decent correction to kind of clear the market a little bit. And initially we were looking at this support at 1517 at the previous 4th wave for that correction to complete. We may fall short of that if the low if Thursday's low at 15, what was it, 1547 or 48, if that low holds, well then we may be moving back up into wave 3 now. Let's say off the wave 1 high we've had 3 waves down in A, we've got a triangle wave B, and we've got a 3-wave move down in a possible C wave, so maybe wave C at that low. The rally off that low is in 3 waves so far, so still left with the kind of lingering idea that we might get another fall down to that 1530 level to kind of fill out that trend channel nicely and lead us higher. Then would look for an impulse wave higher then. So if that's the case, I'm going to go with that as the main wave count. So 1581 should hold, and we'd probably get kind of a larger 3-wave move. So this would make this a double combination wave 2, and we'd probably hit about 1535 to close out the trend channel and set us up, a slight higher low, maybe above support, and close out that trend channel and set us up for a move higher in a 3rd wave advance. Okay, so I haven't even opened up the Treasury Market yet, so let's let that open again. And while it does, will I sing a song? It always takes forever. No, let's get rid of you. I've been looking at a possible triangle developing over the last couple of weeks. Not entirely sure how that's going to work out. It just got this contraction in range that would allow for a kind of a large 3-wave move, maybe up in A, and then a triangle B, and then a spike higher again in wave C. Back above resistance about 123, so it might even hit 124.50 if that was the case. But for now we're moving down lower again today, so let's see how that move has been, it's been in 3 waves. Still looking for a possible decline in a third of a third wave developing. The idea of the triangle is looking a little bit more, let's say, plausible. Excuse me, more plausible at this stage. So it's either a 4th wave or a B wave that's happening right now, and this could be a 5-3 pattern with a break of that previous 120, the level I've been mentioning throughout the weeks at 122.45 level. And if we break 122.45, then we'll switch to that alternate account, either wave 4 or a B wave. If we go to the larger chart there, it would be a 3-wave move, 3 waves up in A, triangle B, and then a 5-wave move in wave C. So you'd expect at least a break of that 123.20 level, but we'd probably push up towards that 124.50 if that was the case. So let's get rid of those scribbles. Go back to the hourly chart there. If this is a 5-3 pattern to the upside, then that interim low must hold that 121.64. If we get a break of that 121.64, then we can more or less discard that alternate account. Definitely if we get a break of 121.50 again, because we could be building up some serious pressure to the downside. I can still count 5 waves down here and a better 5-wave pattern here. So the jury's kind of out at the moment. We've got this kind of tightening range and a couple of points to watch. The balance of probabilities is probably evenly split now between that alternate count and the current wave count. Why don't you? I do not like MetaTrader 5. Okay, so 121.64 level is let's say a confirmation point for the bearish count, and the 122.45 level would be a confirmation point for the alternate count. We're 50-50 obviously at that moment, or sorry, at this point in time. I'm yawning and now everybody else is going to yawn that's watching this. So that kind of wraps up. Yeah, I'm just going to have to follow this throughout the week, next week, and just see which way it kind of falls. I think I forgot the daily chart. The idea that we've got a 1-2 pattern into that 2016 high, and then a 1-2-3-4-5-1-2 pattern into that a 1-2 pattern, let's say, forming now is, yeah, in my mind it still fits very well with the broader picture, with the caveat that we could still see a higher wave 2, and you can see that previous interim wave 2 is back at 127, so you would maybe talk about a 125 to 127 10-year price over, let's say, the next months. Okay, for next week, let's see if this triangle breaks down, so we can rule it out. We could rule out that alternate count. Yeah, that kind of fixes me up for the weekend. Hope you have a great weekend, and don't do anything I wouldn't do. Be good. God bless, and we'll see you Monday evening. Bye bye.